Hello everyone, this is Juan Sarmiento and today is Tuesday, March the 14th. Okay, last week I was traveling, so on the hours that I would normally record this video, I was in a plane, so there was not a chance that I could do anything about it. So let's work as if today was Friday, and then next Friday I will do one more of these videos. So let's check. First of all, currently check my current positions and see what needs to be changed. Okay, starting alphabetically with Adobe, and Adobe has earnings coming up here on the 15th, which will be tomorrow after the market close. Let's take a look at the trade that we have, and here it is. And as you can see, we're not in the center of the cone here. So what do we do? Okay, we could leave it alone because March is only days away. But if you're going to do that, it would be worth it. Make sure that your deltas are neutral, which they are. Or simply close the trade. Okay, we have already rolled up and rolled down some of my longs, which were the call here 375 and the put 320. Okay, as you can see, this is a long strangle because we raised the calls and lower the puts. Okay, one only on each. One long call, we raised it from 350, which was the original trade, to 375, and that's a way to take profits. Okay, so we can simply close it that way, or we can deal with the 350. You can see that we have long calls and long puts, short calls and short puts, and they add up, they neutralize themselves, so we have this position right here. Okay, so you can close the put side and then the call side, something like that. And you can see that today this position is getting profit, so we're going to close it whatever way you can. There are several ways to do this. Okay, for example, the call side would have three legs. We have the 375 long call, the 350 long call, and the 350 short call. Okay, so if you close that, it would, because it has three legs, it will close easily. Okay, so let's say we come over here and see our positions. The March 323 with 3 days to expiration, that's my short call. I can simply close it by buying it. So click on the buy single. Okay, then we scroll down to April, which is 38 days to expiration, and we're going to select the long calls that we have. We're going to sell them, so press the control key so it adds to this one single trade, and control key, and then click on the bid because we're selling that. Okay, and here it is, but we can put three legs, we can put up to 4 legs, and that gives me a credit of 1040. We're going to do the same thing for the put side. Okay, you have them here. Okay, so do not click anything anymore, just click on the bid here for your long put at 350, and here it is. That's a new position, a new trade. Okay, now you press the control key, so you add that to that trade, and we're going to sell. So bid, bang. So now that's a new two-legged position or simulated trade that we're going to do, and we're going to buy the put that we have here position. So press the control key again. This time, because we're buying, we have to click on the ask, and there it is. Okay, so 2 3-legged positions. Okay, so you can see the entire thing. Just click all so that you see the position as it is right now, and we select the two, and bingo. All right, now we're going to close it, and as soon as one of them filled, we're going to adjust the other, or you can start with the expensive one, which will be the put side, and then close the less expensive one. Obviously the price is not that different, so let's do the put side first. Confirm and send. If it gets filled, then we do the call. Okay, we can wait until that happens, and we go to the next trade, which will be AXP. And here's AXP, and you can see that April 6th is my next trade, it's my next expiration, my short, and that's 23 days. So there's plenty of time to see that work. So I'm not gonna do anything about it. Okay, so you can go to the monitor tab, account statement, and go back, I don't know, 100 days. Okay, and then here you'd see, here's our trade, what we have done. And let's analyze that. And that's the current trade. So we are having a little bit of a loser here. So no problem with that. Let it work. It could go that the market drops and then volatility works in our favor, or it could even go back and make us some money on the upside. We have plenty of time to expiration, so I leave it alone. Let's go to BP and just focus on the shorts. The shorts March 31st. Okay, we have 15 days for that to work. And go to the monitor tab, and you see that because it's only one green trade, that means that that's the only trade that I have made no adjustments. So that means that what you see here is a reflection of the original trade. This is the original trade. I have made no adjustments, so you can see P&L from the opening. We have a loser of by $251. That's not a lot. Let's say the market rallies from here and lands in 40. Well, that's exactly the middle of the cone, and you can make money with that. The market could drop to $30 a share with a big spike in volatility. Well, then we can make a whole lot of money here, and that's what we're hoping for. Or what if the market goes to 48? Then we can make money there too. So we just need to let it work. And then next week we would have 1 week to expiration, then we can make the adjustments. So for now, leave it alone. Let's move on to CRM. CRM, we had made adjustments. You can see that I have this April call, 150. We have the call. Currently the stock is trading at 183. We have this April 150 call, and we two of the long calls, they cancel each other. So really what I have here is this 185 call, and that's very close to where I am. I need to change nothing. Okay, you can sell puts, but the reality is you're not going to get much. Analyze closing. Let's just pretend that we're going to do this puts. We're going to sell 2 puts, let's say, because we have 4 long puts. How about if we did puts? Well, yeah, we can get 46 cents. That's not bad. So let's do it. Why not? We're getting a few dollars from that. It's not a whole lot, but it's better than nothing. You can put it at 50 cents. And it's not, might or might not feel, likely not, but then we can make an adjustment before we end this session so that we have the trade look more like where we're used to, okay? More close to delta neutral. And this particular stock is rallying strongly here. Oh yeah, it could go higher here from this point. Okay, let's move on to PANW. That's Palo Alto Networks. This stock was rallying strongly, and now sort of Peter is going into this flat triangle. Let's go to the Analyze tab, and as you can see, it's in the middle. I'm gonna delete all this so we can see where we are. Okay, let's go to the monitor tab, and you can see that it's a single trade. No adjustment has been made. So what you see here is a P&L of 119 loser. Okay, but that's fine because we are March 24. So yeah, we can this Friday we'll have another session, and then we're gonna re-examine this, whether I want to roll it over. Perhaps it will be positive then. Perhaps we'll get a winner, and then we can make the adjustments that we need to make. Okay, so that's PANW. No change necessary. You need to look at this short and see, do we have a week to expiration? If so, a week or less, we need to make an adjustment. Either close the position or roll it over to next month. Let's go to STX. Let's delete all this so we can see exactly where we are. Okay, this stock did go down significantly. Let's get a look at the chart here. Yeah, it's been going down, and now it seems like it's reversing up. It is a mild signal that it's reversing, okay, to go up. Not very strong though. Okay, let's go to the monitor tab and see. Okay, I did an adjustment, made an adjustment by selling April calls. Let's say analyze trade. No, that was something else. March 3rd. Okay. It looks like I tried the puts, and then eventually okay, so let's take a look here. I did a call, I should have done a put. All right, it seems like I did. Yeah, it looked like the put was a rollover. Field. Okay. All right. Let me just see what I'm supposed to do here. Let's delete this for a second. In this case, the deltas are negative. The stock is bouncing back up, so we can make an adjustment by selling puts so that the deltas are negative. You can see that the delta, the puts are at 70. So I'm going to simply sell one of my puts here, and that's a way to adjust. Analyze closing. Just sell one of them. And so when the market goes down and you have, as you can see, I have 5 outstanding puts. Well, I can simply sell one. But if you have only 1 or 2 outstanding puts, then you can do a roll down. Roll down means you would sell one of your puts and buy at another one at a lower strike price, like this. Analyze rolling, and then you will sell one of your puts, let's say 1 or 2, and you can buy one at a lower strike price, same expiration. So I would say 60. And June 16th. There you go. Okay, so doing that neutralizes your delta. See, if I do a roll down, it goes to 52 deltas. If I go with the one sell, it gives me 13. So I would have to do 2 of these roll downs to neutralize my deltas to 21. If If I did 3, then it's delta positive. You can do that too. Okay, but in this case, because we have so many outstanding puts, I can just sell the long ones, and that way we get more money back. Okay, so if I do 1, then 15 negative. How about if I sell 2? 59. I don't want to be that positive, because even though I have a sort of a signal in the chart that it might go up, I'm very skeptical of it. I don't really have, you see all this bumping around? That means we've had bullish signals that failed 3 times. So, and it's going to the Ichimoku cloud. So I'm just simply going to sell 1, neutralize it to close to 15, 20 negative, so that if the market decides to go down, I will be making money. But if it bounces back up, I will certainly make money too. So I'm just going to sell 1. You can say mid to $10, but we are going to adjust that, because it could be 980 here is the price. So I'm going to set it to 10 and see what works best. Let's move on to TSM. All right, TSM. Let's see what the chart looks like. Okay, that's gonna go up. See, contrary to the STX, here we have a definite signal here, and the stochastics went up and then down, and then now it's strongly, and the TTM squeeze is showing a more definitive move up. So yeah, it could go above the Ichimoku cloud, which is, you know, well ahead. That's a big point to break through, and I think it might. So what do I do? Simply look at your current trade. Oh, good. We have made money here at the center of the cone. All right. So March 17th. All right, because this is this week. And I could simply adjust it, roll it over, and then would make a whole lot more sense. All right, so let's close this March and extend it, sell the April. So I'm going to say analyze rolling, and that will close the short. And that was my STX, sold at $10, so that means got a good price for it. Okay, so we're gonna buy the March 17th, and we're gonna sell a month from now. So the expiration will be a month from now, which will be April 14th, for example. Okay, that's good. And then we end up with a delta neutral, only 2 deltas, delta neutral trade. That was the above Adobe also filled. Let's take a break here, and I'm going to go to Adobe, because remember that we have this trade on Adobe. We were closing and we filled the put side. Now we get to fill the call side. So let's close the put side here, and now we're going to do the call side. And looks what it looks like. It looks bullish, okay? And that's fine. You can keep it, but the problem is this. They report earnings and anything could happen. So I'm going to close that and get $1,000 out of this call side. Okay, let's go back to the TSM again. And in this case, I'm going to do a rollover, as I was saying. April is my new shorts, April the 14th, and I'm going to close them. And that was CRM as well. Okay, let's go back to CRM in a minute. Let's close this, all right? Let's do this rollover first for almost $5, $4.77, 76 cents. Close that. And what we are going to end up with is this trade like this. Looks exactly as a straddle would look like. You might say 2 to expiration, so that you see what it would look like. Or this, or 3 to expiration. Tell you what, let's just close that. High simulation, high positions. This is my current trade, and this is the rollover. And then 2 to expiration is what we want to see, and that's what it looks like. Not exactly what I wanted to see. Oh, I see there is a color here, but it's very faint. You see the purplish color here? I don't know exactly how to adjust that. But you can see it has this shape of a genie trade. So that's good. Let's fill this in and then we'll show it. And then that way we get some money back. All right? Let's wait until that fills and then we'll discuss it. Here it is, TSM, it's a rollover, and then we have Adobe here is the call side, and you can see that my ask is actually below the current mark, so, and then filled. Great, the Adobe, now we are out of it. Let's analyze this trade, show all, and yeah. What just filled? Oh, I'm sorry. It was the TSM who filled. The Adobe is still running. Okay, let's adjust, cancel, replace, unlock it, and confirm. And you move around that until it gets filled. In the meantime, let's take a look at this TSM. Go to the Analyze tab. Here. How do we know what the current position looks like? Well, deselect everything, and that's what it looks like. Show 1 to expiration. Okay, and that was the Adobe finally filled. Okay, we'll be back to that in a minute. That's my trade. That's what it looks like. Okay, not very helpful because it's not showing me the adjustments that I have made. So here's my original trade. Let's hide the position. Here's my original trade, okay, as I copied from the Analyze tab, from the Monitor tab. Account statement, you can have it here. You can just simply go to Trade History and make all these adjustments, okay? And I have, so that the current trade was long for April 21 and short March 17. And we make this adjustment here. Let's delete this. This is the new trade as it looks like right now. All right. Now I want to make this adjustment so that the new trade looks exactly, instead of 2 trades, let's make it into 1. My cost is less, so I will calculate that. As long as you have the same number of puts and calls, both short and long, you can simply reduce your credit. So the original trade was 1151. You can see that number right here. And we subtract $4.74 that we just got as credit. So minus 474. That gives me 677. My new trade is 677. Okay, we can select it here and paste. Okay, and then just make sure that it's the right shorts, which will be 14 April. That's my resulting trade. Okay, and you would see that my P&L and my costs and all that matches. The P&L should match 1052.76 versus the new trade 1022. Okay, let's make sure that this is correct. 6, yeah. Yeah, 1022. 1022. Okay, so then we can delete all that. And then this is my trade as it stands right now. And you can see that I have a profit of $1,000. you can close this position, couldn't you? Right now, analyze opposite, you can close it right now, like this. Okay? And that gives you $1,068. I'd say, no, I want to see it work out a little more because this stock looks like it's going to make new highs. And if it goes to 105, it will be right here, 105, right there. And that will be profitable for me. Right there, it would be worth $4,000, not just 1,000. Okay, so I'm willing to take that risk. If it goes down here to 78, guess what? $4,000. And so we are betting on a strong move in either direction. That's the whole purpose of this trading strategy. Okay, so let's go back to the activity and positions, and we have completed all of our trades for the day. The Adobe got filled, the call side and the put side, and there's nothing left there. All right, that's all for today then. Thank you very much for joining me, and see you on Friday to make up for the leftover trade that I didn't make last week. Thank you very much. Bye-bye.